Welcome to Buy, Hold, Sell. I'm Ben Clark. Joining me today, we've got Oscar Oberg from WAM and Dave Allingham from Eli Griffiths, and we're going to be talking about the population boom that is coming to Australia. 29 million people will be living in this country by 2030. There's a lot of babies that are on their way, and we thought we'd have a look at a few of the players that might leverage off the back of this structural tailwind. Dave, start with you. Arena REIT, so it's in the property space. It's actually been pretty good. Buy, hold or sell?
Look, it's been phenomenal. I'll say that's a hold at the moment. The REIT sector's been a great place to be. 40% premium to NTA. You can issue scrip units in the trust and buy accretively. It's probably going to stay well bid, but certainly a hold. I wouldn't be chasing it up here.
Okay. These guys have just raised capital, I think, Oscar. What's your thoughts on them?
Look, sell for us. They're doing the right thing, given their premium to be buying childcare centres right now. But look, it's trading at a 30% premium to its net tangible assets, so it's a sell.
Okay. And GEM, which is the biggest childcare operator out there, it's been pretty choppy. Buy, hold or sell?
Certainly been very, very choppy. A lot of false starts, but look, we think it's now that is the time to buy. Okay. There's a lot of operating leverage in this business if they get occupancy moving. And for the first time in about 5 or 6 years, the supply is moving in their favour, so it's a buy.
Okay. Bit of a checkered past this one, Dave. Have you got a different view on it?
Yeah, look, I'd say a hold, only because it's come back a bit in the last couple of weeks. Look, the management are doing a good job there. It's a tough industry. They've got a big scalable business that can't really grow via acquisition anymore. It is going to benefit from supply-demand fundamentals. Balance sheet's been fixed. It's in a reasonably good place, generates good cash. But in our view, 15 times, not a lot of growth. Bit tough for us.
Okay. And then 3P, which it should be in the right space. Global technology, SaaS business. The market loves these businesses at the moment. It's been terrible. Buy, hold or sell?
Look, we've got a hold on 3P Learning. We own it in our emerging companies fund. It's some optionality on what they've come to the end of their 3-year strategic plan, and the plan is to re-accelerate growth post the investment in R&D and some of their distribution sales networks in the US. So I think if we see signs of that towards the second half of this year and into FY20, there's a real chance for re-rating and earnings growth. So we're hold. We're just waiting to see the right signal before we add to the position.
Yep. And 3P, Oscar, what are your thoughts?
Yeah, it's a buy for us. It's the cheapest technology company in the market, as Dave said. It's got no debt, 25 mil of cash on the balance sheet. Agree with Dave. I think you're going to see signs of top-line growth in the US and Australia coming into the fourth quarter of the second half at the full year result in August. So yeah, we think it's a buy. Okay, and moving on to the second largest childcare operator, Think. It's also been pretty choppy since it listed. What's your view on Think? Yeah, it's a buy. It's got a great management team, and they've done well repositioning the business and investing into their new Nido brand. 10 times price earnings multiple, growing at 30%. It's a buy. Okay.
Dave, Think, buy, hold or sell?
Yeah, look, I'd agree with Oscar. I think it's a buy. And to Oscar's point, there's only sort of 55, 60 centres, so you've got a low denomination there to grow the business via acquisition or even organically. So to some degree, it's got its own destination in its hands. Okay.
And then Baby Bunting, we've all been stung by this store, and it seems to have wiped out the competition. Buy, hold or sell?
I've got that as a sell today. I think you've seen a big re-rate in the stock, 20 times earnings. Management are doing a great job, but competition hasn't gone forever. The gross margins are lower than most retailers too, and I think the Aussie dollar, the weaker Aussie dollar, will impact its gross margins into next year. So still a tough place, I think, retail. Yep.
Different opinion on that one, Oscar?
I do actually. Yeah, we think it's a buy. I think it's a big tailwind. The competitors going out of business. And also we see upside on the gross margin going forward, just in terms of what they're doing, investing in the distribution centres. So like for us, it's growing at over 30% the next couple of years, so it's a buy.
Okay, well, kids are a seriously expensive business, but not all players are reaping the benefits of all the oats being sown out there.